All right, it's time now for Smart Charts with Abigail Doolittle, where we look at timely topics through the charts. And this week, Abigail, you're going very long term.
Yes, we are, Joe. Very, very long term. And to do that with me is Joe Gagliardi, or John Gagliardi, excuse me, John,
okay,
with Fidelity. And before we take a look at your first chart, which is a 50-year chart, very long-term perspective, you know, you are a regional brokerage consultant with Fidelity.
Yes.
So I'm very curious, within the CMT community here in New York, and probably even on a national level, you're very well known because of your charting skills. But at the same time, you're dealing with some of the high net worth clients. And I'm curious to know what their interest is in charts, because institutional investors very interested in technicals. Is that true too for some of your high net worth individual clients?
Absolutely. All my clients come in, they always want to know things around charting. And the one thing that charting lets you do that no other discipline really brings is the risk management. And even if they currently own it, and it's not your cost, but now it's your opportunity cost, how much risk are you taking to get to that next level? And then you start to backwards in the fundamentals and say, is this really at full valuation, or should I stay in the trade?
So you can really set levels. Well, one chart that your clients must love, and you are saying if you can be in for the next 40 years, this chart, this is really incredible. Although I will say it's not a log chart, so it's very dramatic, not scaled, but nonetheless, the story is clear.
Yes, there is no shortage of drama here. So we've got the transports versus the Dow Jones Industrial Average. And everyone always thinks about, when they think of markets, they always think the Dow Jones Industrial Average. That's the oldest and most well-known of all the averages. But very few people think about the transports. And I always I have millennials come in all the time and they say, hey, John, I've got 30 or 40 years. What should I invest in? And I always tell them about the S&P and the indexes. And then I say, and if you have an appetite for more risk, the transports. And the only thing I like better than the return that you got on the Dow Jones Industrial Average is this white line, which is the transports.
The transport.
And you can see you've got probably about a 65% better return overall than you had on industrials if you had the last 40 years.
I have to ask, though, in this new economy, the information age, that area of congestion up top, is it a possibility that that comes back down as we go into the new transports or technology, some of those big tech names that I would associate more with millennials than the Dow transports?
Yes, and you're kind of alluding to Dow theory. So in essence, we're looking at this as compared to industrials, and people are always concerned if the market's really in rally mode and tech is leading the way, as you're saying, tech is up nearly 40% for the year. When we're looking at the move that industrials have, we're at all-time highs, but you can see transports are lagging a bit. So a lot of people that are real purists want to see those transports hit all-time highs. And you wonder, in the age of technology, do we need this? Yeah, every time everybody hits an Amazon button, that has to get shipped.
True. Very good point. Nice way to tie it into the big tech. So now let's take a look at an index that you really love, or actually this is an ETF.
Yes. So I like to say the earth is breaking out. We've got breakouts across the board. It's not just the S&P. It's really a worldwide phenomenon. So I use this ETF, URTH, to say, look, it is the entire worldwide index, according to MSCI, that is breaking out. And you can see we broke out. We've had this little pullback for the last few days, which if you're interested in something uptrending, it's always great to be part of it just as it's beginning. Your risk reward there is your best odds, because it's like falling off the curb and you have all this upside potential of all blue sky ahead of you with no resistance.
And where would you set a stop on that?
I'm kind of a purist. I start looking at those last couple of lows and just take your biggest low would be your highest amount of risk reward that you take on.
Well, it sounds like overall you are a stock bull.